Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, October 8th. Stocks traded in an extremely volatile manner on Wednesday as investors digested a coordinated global interest rate cut, economic concerns, and turmoil in the financial markets. The S&P 500 settled with a loss of 1.1% after a surge in selling interest in the final half-hour trade sank stocks from a 2% gain. The S&P 500 traded as high as 2.5% and down as much as 2.5%. 8 of the 10 economic sectors posted a loss in heavy trading volume. The Federal Reserve, the European Central Bank, the Bank of England, the Swiss National Bank, the Bank of Canada, and the Swedish National Bank made an emergency intermeeting coordinated 50 basis point rate cut. Increased economic risks and moderating inflation pressures warranted the move in an effort to improve liquidity and reduce strains in the financial market, the Fed said. The Fed funds rate is now at 1.5%, while the discount rate stands at 1.75%. The move to cut interest rates came as global equities tumbled due to tight credit markets and economic worries. Japan's Nikkei plummeted 9.4%, and Hong Kong's Hang Seng dropped 8.2%. Europe fell 6% as its financial institutions remained troubled. Britain announced a plan to bail out its banking system, which included a pledge for $87 billion in direct support for 8 major banks, according to reports. In corporate news, Bank of America fell 7.6% after its $10 billion common stock offering was priced at a 7.5% discount to yesterday's closing level and a near 32% discount to Bank of America's closing level on Monday. Bank of America plunged more than 25% on Tuesday after announcing disappointing third-quarter earnings, giving a dour outlook and cutting its dividend by 50%. The financial sector, which dropped 3%, ended the session as a laggard after giving up a 3.9% gain in late session selling pressure as investors were aware that the SEC short selling ban is scheduled to expire at midnight tonight. Dow component Alcoa marked the start of the third-quarter earnings season on a negative note after the aluminum maker's results fell well short of expectations. Third-quarter earnings per share dropped 40% year-over-year due to falling aluminum prices, softening demand, and higher costs. Despite the weakness in Alcoa, the materials sector outperformed with a gain of 2.6%. Agricultural chemical company Monsanto pleased investors with its quarterly earnings report. Several retailers reported a decline in September same-store sales and cut their third-quarter earnings outlook. Walmart and Costco both posted solid growth, however, benefiting from bargain-hunting consumers. In commodity trading, oil prices saw large swings, moving largely in tandem with stocks as traders speculated how the global economic turmoil will impact demand. The government's weekly energy inventory data showed larger than expected increases in crude and gasoline stockpiles. Oil prices fell 1.6% to $88.64 per barrel. Despite the economic turmoil and uncertainty, Treasuries came under selling pressure after the government sold additional debt to meet high investor demand, according to reports. The 10-year note dropped 46 ticks to send its yield up to 3.67%. The S&P 500 has now posted 6 consecutive losses, which is its longest losing streak since 2002. I'm Pat O'Hare for Briefing.com. Thanks for listening.